right, here we are. It is November 16th, 6:30 p.m. Eastern Standard Time. It does feel a little bit like 4 a.m. Eastern Standard Time. Not sure why. Maybe because it's Saturday. Maybe because it's cold. Maybe because it's windy. Not sure. Maybe, possibly, it's because for the last 24 hours I've stared at a candle that has only moved $16. It's possible that our Saturday candle is going to produce the least in over 3 weeks. But we have a chance over here, right? We got to beat this 987 and this guy moved 24 bucks. Right? That seems like a lot. Now we're down to $7. $7.77. So, clearly not much is going on. It's cool. We had a little push to the upside. Just about a retest of the 50. A little push to the downside. Just another touch of the pattern support. Right? The ceiling, not the ceiling, the Florida pattern. So, let's bang out some charts, right? Let's take a look at some alts. We'll talk about dominance, because dominance is flatlined right here, just under range. All right, so still important, but this push right here was big, right? That was a good push to the upside that got rejected, right on our trend, a little past the trend, but the trend held, right? Nothing closed over the trend, so that's good. We like to see that. So dominance is just sideways at the moment, similar to Bitcoin, not doing much. CME we closed yesterday, right? That was a close at 84.85. All right, so straying too far from close, it's not the greatest idea, especially if you're looking for a longer term play up. You certainly don't want to get into a situation where you're going to want to fulfill that gap right away. But if you do go lower and then want to fill the gap up above, that's okay. Nobody really cares about gaps to the north side. It's gaps to the south side that people freak out about because they don't want to see significant gains and then have to lose them, right? Or have to watch price go back down into those levels. So we do have upside targets still, right? I mean, we got a gap at 10,180 to 10,125. Right? That's still in existence. We have a larger gap up here from 11,695 up to 12,000. Right? That's still a gap. But again, nobody really cares about those because we'll eventually get to those. That's not a big deal. It's these downstairs one that these freak people out. 71, 75, 72, 80, 62.90 to 63.20, 60.85 to 61.10, 52.30 to 52.25, 48.50 to 48.90. Oh, yeah. There's more over here in 3K land. Yeah, anyway, those are the ones that freak people out. So, we are way the hell up here, all things considered, judging by what we just looked at. And we closed out at 84.85, which on the CME chart is exactly where you would be for the swing fail. But it's the CME chart, so really pay too much attention to anything super TA related when it comes to that. Oh man, we're getting a push, big time push, 1693. Hold your horses, everybody. We are up 0.2% so far from open, and we got another 23 minutes to go. We could crush. Oh, we already lost it. Damn. No point in talking about the crush. All right, Daniel, hello. Hey, he's pink again today. Alexander, good evening. Oh, man, dude, I cannot look at your name and not think coffee memes. Kofifi memes. I really wish it just said coffee. Just coffee. But it's cool. It's at support. Yeah. Yeah, from this. Yep, for sure. It's a little bit too high for this support. It's too low for this to be resistance. So it's just chilling. It's just chilling. Bottom down, and it looks like Bitcoin may have a bounce here. It still could fall, even all the way to 7,900 before it does. Yeah, I mean, dude, this thing could crush all the way down to 7K. Well, 69 and change. It's the bottom of the pattern right here. So, I guess like 69.09. Tomorrow would be a little bit lower, so like 68.95, give or take. Yeah, I mean we've lost like all major support's gone, right? We know that all major IMAs are gone. We know that. As far as this, like this action here, let's get rid of these guys. So as far as all that action, right? Your support levels were here, 85 and change, 85.96 or something. That's gone, right? Break and close below that, retest, push up. So these levels are dead. The next support level is this right here, top, right? So that level is basically saying, forget about the false break and just go to the level that makes the most sense. And that's this level. So from like 83.77, you know, you could go up or down. Let's say you went topside wick, you're like 84.16. That's the next support level, right? We only just like touched it. We're not sitting. Price isn't sitting on it. It moved away from it, which is good. It found support, if only temporarily. So yeah, we'll have to see how that plays out. Right, the big thing here is going to be this, the factor of volume. Now there just isn't any, right? So it's just like there's just nobody trading it. So you know, buys and sells and sells and buys. They're just not doing anything. A couple dollars here or there, within the same range, just doesn't do anything. Oh, did I not put the link up? All right, hold on. You guys should know where the link is by now. So it's always on the website. Yeah, so that's just, you know, it's just a boring day. Whoa, what is this doing here? Hold on, guys. Hold on, peoples. That's on the wrong screen. Gotta go over here. Let me put the Okay, here we go. Now I got to take this. Don't worry, guys. Little copy paste over here. There we go. Perfect. Okay. Everybody's happy. Dr. Mills. Perfect. Okay. Anyway. Back to business here. Okay, yeah. So volume is nil, non-existent. It is Saturday trading. It is weekend trading. We do sort of expect low volume sideways action, but what we can also get is major ridiculous moves, which is nice because the books are so thin, right? So on like Monday, it would take you whatever, just throw a number out there, like $3 million to move the price up $100. Today it might take you like 50 grand, right? Like that's the difference. It's so bananas. What? What? Mark. Oh my God. This is why we can't have nice things. This is why we can't have nice TA. This is why our candles can't look pretty. This guy. Unbelievable. All right, anyway, Samuel says, what's up, everybody? Coffee says, don't wicks fill gaps. Yes and no. So in some traditional senses, gaps are not filled by wicks, right? It has to be filled by a full body or multiple bodies of candles, and not a wick. In other words, like a closed state through a body. In other theories of gap, when it comes to gap theory, a wick is perfectly acceptable, right? It's legitimate price action. It is price. There was definitely people buying and selling in that zone, and therefore, it's a win. The problem with the wick, you could have still skipped over X amount of orders and just closed out, and visually you would only see a wick, right? Like, this doesn't mean that there was an order at 94.36 and then 94.37 and 94.38, 94.99 and all the way up to 10,350. It doesn't mean that every single one of those dollar amounts got traded, right? I mean, you can still skip them in the book. If the book is set that way, sure. You're just filling spreads. So you can still have a gap. So even though if you have a body that closes that as well, and you still got hidden gaps inside, right, it becomes like less relevant. You could do gap charts 1 hour, 4 hour, 12 hour. I don't. Sorry, I don't do that for CME. There are enough gaps on CME daily that I do not go down to the hourly and the 4 hour chart. I would still be doing this chart. When I redid it, I don't know, now a couple weeks ago, it was 488 candles, every one open to close. And I look at gaps a little bit differently. So I look at gaps specifically from the previous day's close. I do not take into account what that day did. I don't care, right? I care about where it closed, because that is the only number that's important. The gap is created when the next candle opens. So for example, right here, right? This candle closed actually like exactly where it closed last time, which is like 84.85, right? But the gap's created on the open of the next candle, which opened right here, like 90.75, or technically 90.55, or 90.65. So that's the gap to fill. Right now, this gap has been filled right here. So it's no big deal. But, you know, it took a very, very, very long time to finally fill it. But that's a gap. And that's super easy to see because that's like a gap anybody could spot. But then look at this. Say, all right, well, the candle, you know, technically, the candle closed here. Right? And this next candle actually opened above it, creating a gap that was filled immediately. All right? But this candle closed at 93.55. The candle opened at 93.65. That's a $10 gap. It's not easy to see. That's why you have to go one candle at a time. Trust me, it's mind-numbing and takes forever. All right? But it was closed that day. You filled it that day. In other words, you traveled back to the open of the previous candle, or you traveled back to the close of the previous candle the next day, the very next day. And so therefore, that is not a gap. It's been filled. It was a gap, but it's been filled. It was a $10 gap. It got filled. This candle right here closed here and opened here. It opened all the way down here. That's the open. It's a bullish candle. It opened down here. That whole thing is a gap. This right here constitutes a gap. There's a gap in trading. Now, you wouldn't know that by looking at it because you got a wick down there, right? So even if this candle opened here and just like came back down here, you wouldn't be thinking like, oh, there's a gap in price, because there really isn't, because you got a wick down there. The problem is the wick happened prior to the close, so it doesn't count. It's not worth anything. Now, you want to fill a gap with a wick, I'm cool with that. That's this right here. Okay? So, like, here's your gap. You close the candle here. You open the candle up top over here. You push down to here, but you got to get all the way down here. So you push down to here. Okay, and then this, push down a little bit more. And then this, push down a little bit more. And then this guy ended up pushing enough to fill the gap. Right? But this particular case took 1, 2, 3, 4, 5, 6, 7 candles to fill that gap. That's 7 days. Now, 8 times out of 10, 9 times out of 10, I don't know, something like that. I didn't go back and get the number, but almost every one of these gaps is filled the next day. It's filled it's filled like the very next day. There are situations where they don't fill the next day, and those are the very obvious gaps, like this guy and that guy and that guy and that guy and that guy. You can just very clearly see, like, okay, well, that clearly wasn't filled the next day. But all of this inner crap, there's a gap in like literally every candle, almost every single one, unless you see a very perfect open to close. Like we would see in crypto normally, then it's okay. But it's rare. It's rare that, your open from the new day is exactly the same as the close of the day prior. All right. And especially when we come back to open on Sunday after closing on Friday. But because CME doesn't have the type of volume, they might have like size volume, but they don't have tradable volume. They don't have consistent tradable volume where you watch like the books on MEX or BIT or FinX or Stamp or any one of those bigger exchanges. Like, they're ripping through orders by the second. You'll get lulls. You get a lull here or there where, like, you don't get much. But for the most part, it seems like someone's always buying and someone's always selling. So there's always a transaction to move the candle. So more often than not, you just bleed right into the next candle. So when you look at here and you say, all right, well, open to close, just take these two candles. Like, they're essentially the same. The close on here was 94.26 and 94 cents. The open over here was 94.26 and 94 cents. It's exactly the same, but that's because people were trading. People don't stop trading because it turns 7 o'clock. They trade and trade and trade and trade and trade, and the time changes. So they just keep trading. This is one consistent linear path for them. It never ends. It's an infinite timeline from which we segment it out into daily candles or hourly candles or 4-hour. Could you imagine if, like, every time a new 5-minute candle was going to print, everybody was like, well, hold on. And 3, 2, 1. Okay, everybody, trade again. they'd have to do that for the 1 minute, which would affect the 5 minute, which would affect the 15 minute, which in turn would affect the 30 minute, the 45, the 60, right? The 240. And then you start getting into like 6 hour, 12 hour, you know, the ones that trade the 8 hour, of course. Yeah, it's just like, no, you just trade and then we break it down into time segments that work for us, that work for our charts. Look at this. Oof, we are on the move here, guys. $16.89 up. Oh, this is huge. Okay, Nasser. Good evening. Youpie, hello. The link of the live stream has not been given on Discord for information. Thank you, Youpie. Thanks. I told you I was tired, right? Maybe it's the wind. It's not myself. It's not good. Not good. Estaj, what's up? What's going on, Youpie? I had to go to the website. Oh, my God. Jeez. Well, Youpie, at least you knew where to go. It's always there. It's always there. I just put it in Discord to make it a little bit more convenient. But, yeah, it's always on the website. So, Youpie figured it out. Good job, Youpie. This guy just deletes messages, so I don't know what to do about that. Coffee is just laughing, and then Mark says, I just said what's up. Then why would you delete it? Right? This guy. Yeah, so there's not a whole lot, insane amount of detail work, and the gaps. Yeah, thanks, dude, thanks. It is, man, it is, and I will go back. It's just daunting. I want to go back and I want to calculate every candle from the beginning of CME history. So essentially what I want to do is I'm going to go back through. I'll do, open to close. Was there a gap? Yes or no? Gap up or gap down? Mark the box. And then how long did it take for that gap to get filled? Was it the very next day? Was it 2 days? Was it 3 days? Was it 4 days? And then use that data as like some sort of confirmation or just something to like reference, when we see like a big move. Let's say come tomorrow when CME opens, right? And it opens at whatever, 7,300. And we say like, oh shit, we got a huge gap from 73 to 84, 85. Can we expect that thing to fill quickly? Not quickly? What has it done in the past when it sees these huge gaps? And I'd be able to look down at the data and say like, all right, well, in the history of CME, we've only had 2 gaps that were ever like over $100. And each one got filled inside of 6 days or something. I don't know. But that just gives you, you want to make trading decisions off it, but it's just another tool to have, right? It's just another point of reference to look at. Yeah, it's just something good to know. And like with the chop, with all this crap, like when there's not a major gap like that, like almost every single one of these was filled the next day. It's wild, but like these are all trades you could have executed. Like literally every candle. So like right here, watch, this one probably won't happen. But whatever. We'll do it till it stops working. So right here, candle closed here, opened here, pulled back, right? We do have a gap right here, but we filled it right here, so I don't care about it. All right, but it pulled back, didn't quite get it. That would have been a short trade you would have executed, right? This one would have been a loser. Sorry, guys. So bad example right here. Opened here, or closed here, opened here. When you come down and fill that gap, yes, you did. The very next day, bang, you filled it right away, right here. That's all you needed. You got a little bit extra. All right, you closed here. You opened here, right? Are you going to pull back to the open of the previous day candle? Yes, you do. Okay, perfect. This one, you close down here. You open up here. Are you going to pull down and get that short? you do. It just takes a few days, right? It took 1, 2, 3, 4, 5, 6, 7. Yeah, it took 8 days before you got that filled. Let's say on the long side, you got a close of the candle down here. You got an open of a candle up here. Do you come back and fill that gap? Yes, you do the very next day, right here. Right, so you could long the open back to the previous candle close. Right here, you close down here, you open down here. Are you going to push back up and fill that gap? Yes, you do, right here. It's not much, but like this would be a scalper's like paradise, right? Because every one of these trades, you know, you're not very many of them are you going to be wrong. Come down here. Here's your close. You open this candle down here. Are you going to push down and cover that gap? Yeah, you do right here. Bang. Perfect. All right, you close this candle out over here. Now, this one is one of those situations where the gap is tiny. It's just a fraction, right? But it is filled. So here's the close of the previous day. Here's the open of the new day. Are you going to go back up and fill that gap? And here you go. Yes, you do. Right? You even get a little extension on it, but you certainly do. Now you close this candle out up top over here. You open it down low down here. Are you going to fill that little $10 gap? You sure do right away. Right here, you close the candle top over here. You open the candle up top over here because it's a bearish candle, so it's going down. Are you going to push down to previous candle close? Yes, you do right here. Perfect. Right here, you close this candle down here. You open the candle up here, up, right? So you got an upward gap. Are you going to push down and fill it? You do right here. Bang. So, I mean, like I said, dude, every candle. I'm exhausted just thinking about it. It took a really long time. Like I had to take a break. Anyway, this is definitely Joe's fault. So yeah, gaps. We got a minute and 25 seconds before we close this thing out. Holy moly! All right, let's see. Thanks. Yes. Do averages and number of mean days. Wait. Do averages and number of mean days. Yeah. What? What do you mean? What is it? What are you saying? Do averages and number of mean days. You're gonna have to ask again. I don't know what you're asking. I would like to find out when we talk averages, I'd like to find out like the average time to fill. You know, like let's say the average time to fill a sub $50 gap, right? Is it like 95% of the time we fill it the next day? Because then that's a trading strategy right there. That'd be something I'd like 25x short back to previous candle close, right? And if 95% of the time I'm going to be correct, well, then that's 95 out of 100 trades that are going to execute with percent gains. So if that's what you're asking, then that is information I would like to find out. Yeah. Okay, let's see. Nasser, me too, had to go to the site to get the link. It's so slow. Well, website needs a lot of development too. I'm a dev, by the way. If you guys want, I could do something. Nasser, excellent. I know we have a team that is dedicated to, improving the site. They are actively making changes. As we speak, there is a conversation happening that is trying to roll out some newer UI, UX look at things. So yeah, that's all in the works. But dude, Nasser, that's awesome. Definitely bring that up to JC and see what's up. MMLL with the iWink, as well as the number of days for reversals following closures. Oh, wait. Do averages and numbers... So this was broken up into multiple sentences here. All right, so do averages and number of mean days as well as number of days for reversals following closures of... I'm twice as confused now. MM, what are you doing to me? Well, hopefully I answered your question. All right, let's see. Coffee says Nasser is shilling, really, question mark, and Nasser smiles back. Okay, this was a seriously underwhelming Saturday in terms of BTC movement. Yeah. Well, we did close the candle down. We closed it down at $21.14, so we didn't break any records there. That's a shame. Did move a total of 0.25%, everybody. And the high side opened up at 84.59, hit a high of 85.39, a low down to 84.23, closed it out 84.84. So what did we do today? I know. Nothing. But that's not true. We did do something today. All right, we got the retest back. Oh, what is this? We got the retest, or like a back check test over here on the 50 after breaking close below it. So this is what shorts want to see, just like they saw it right here on the. I can't even see this. I gotta move that. We gotta move this up. Let's do that right now. Bring the front. Boom. Easier to see. Okay. And maybe this is just too bright. Dial that. Let me dial it back a minute, guys. There we go. We'll bring out the pastel Easter colors. So it's very faded now. There. Now you can see the 200. All right. So the retest over here didn't quite get it, so a bit of a front run. But this is what shorts want to see, right? You break and close a major moving average, right? And then you got the push back to it so that you can short it proper. That's good. Good for shorts. All right. On the south side, we just got another test of the falling wedge, the bottom side of the falling wedge. So really, like nothing, no new news here for the pattern traders. Pattern traders are still holding on to that falling wedge. Falling wedge is still legit, right? It's still doing its thing. So until the falling wedge has a breakout or a breakdown, it's really not much for pattern traders to do, but watch. Wait and watch. All right, let's see. Now MM is just laughing. I assume you're still long with a view to 11.4. Yeah. So I'm long to 6.1. Yeah. So 11.4, 11.363. This culmination of nonsense over here. You could pull at 3.8, right? I think that'll just be a stopping ground. Just hang out for a minute, pull back, right? Grab some support over here, flip this level proper finally. And then really there won't be much in the way, because if it does what I would be looking for it to do, it would be above like every moving average. So there's not like a lot of overhead junk like, we're going to smash our head on this and this and this and this. Now, every one of these levels can be considered important. So we could definitely struggle at the 50, the local 50. That's obvious. We could struggle at this little intermediate point over here, somewhere around like 10.9, 10.950. But this area really has the most interest for me. And that's based off of a few things. Culmination of, or confluence of, local 618, right on top of the pullback 236, on top of the all-time high 50. They all seem to be sitting in that same little ballpark. And then you know me, I love my harmonics, right? So, that being said, that's a good spot for, working our way up, right? Because my actual target would be like well over here. All right. But I think 11.4 is a pretty good, middle ground to be pulling profits. Right? So, but, judging by the bigger picture, right, the low, high, 6.1 pullback, then I start looking, because there's levels that I really like. If that 618 stands, then there are levels that for me would be C targets. All right? So, once you have your X and you have your A and you have your B, and your B ends up being a 618 or pretty damn close to it, well, then my eyes are really fixated on what potential C's could we see? You see what I did there? Oh man, I'm full of jokes today. What potential C's could we possibly see? That's pretty good. So like on a super clean chart, right? This is just Coinbase on the weekly. But, you know, I look at something like this and I'm like, well, all right, X, A, and then B. So I'm looking at 612. Like, I could start looking at potential C's. You know what I mean? And the first potential C would be a 618, right? So 618 would be like 13 or 11,364, right? Which is my very first target. And we could see price reverse there. And if price reverses there to harmonic traders, we're not at all surprised, right? We're expecting that. But it doesn't have to be a 618, right? It could be a 113, you know? And then we're talking about like painting a shark. So it'd be like a 113 would put price around 14.7. Crab only dictates that it needs like a 50% move. So be looking to start, you know, smashing head somewhere around like 10.588, 10.6, right? Where everything else is either, you know, a 618 or 113 or higher, where you could be looking at like a 127. But a 127 here would make less sense. 127. That would make less sense because of the 618 here. Generally, if this was a little more shallow, you know, if we used like this candle, we were like, oh no, it's like 574. Well, that opens up the door for like a cipher, right? Because cipher's got to be like a 3.8 below a 618, right? Which this fits, right? It's at least a 382. And it closed below a 618, right? So that's fair. So if that were the case, right, then you'd be looking at like a 127 over here. So in other words, basically, I'm just saying there's a lot of options, right? So as soon as I see this development, like, and this is a good impulse move because this impulse move broke levels that were important, right? It broke this level. Right, and then it broke this level. 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 You'd like to see one or two, you know, previous structure levels get broken in an impulse move. This broke 1, 2, 3, 4, 5. Making the impulse move that much stronger because while you were breaking these levels, right? You were posting significant gains without major pullbacks. This little sideways action right here is whatever. This is whatever, right? This is a little bit more intense, but we already have our high, right? Our high is all the way up here. So we started coming down anyway. So that doesn't matter. All right. But yeah, so let's just say, you know, I went with a 6-1 just as a potential, right? Just as a potential. We'll call it 619 because I don't want to play around with that thing forever. Which would get us to 11,364. I'm immediately looking for shorts, right? Just immediately looking for shorts. And this would fall into like the 127 range. So it'd be like a Confluence 786 and like a 127 from BC. So if I could find 1, 2, like that. All right. And then once I draw it out, then I'm like, all right, do I have 7-8 Confluence? I got 7-1. That's okay. It's not great. My downstairs D target is 61.79. Does that even make sense? And then I would look left and be like, hell yeah, it makes sense. Look at this. Say, look at this whole bottom zone right here. Wow. Dude, that's perfect. So when you look at the bigger picture, you look at it like, all right, well, price rallied up, made a high. came down, had a bounce, accumulated, and then dumped. All right, so after the dump, we smashed up through that whole accumulation zone and a few previous structure levels on top, painted ourselves a local high. We did not get higher than our previous high, so we created a swing fail. Swing fail came down, price dropped to where? 618 from the impulse move. Impulse move gave you what? Another false break, another failed rally, another swing fail, because generally speaking, you're not going to break through the first time. Price comes back down and lands where? The same level that you were accumulating at before you dumped. That is price action. And that's perfect. Now, that's not to say that it's going to happen, but at least I could visually see price come down to 61.79 and I wouldn't even blink an eye. I'm 100% prepared for it. It's no big deal. Right? I'm also prepared for this to come all the way up here, in which case that's our second touch and validates this bigger move. And that's how you start to build thesis. Like the one I shared the other night, like, you know, this move is in there, right? Because it makes a ton of sense, right? There's so much confirmation or confluence. Look at this trend. Look at that trend line. Holding, dump, push up, instant break, come back down, rejection, resistance, and if it came right here at that time on January 27th, right, that would not only paint our C target, which would give it another reason to go south, but it gives us a time frame to which maybe we can expect that to happen. And that still paints ourselves a pattern that will then naturally pull itself down and pull itself down right to an area that was super important before that impulse move. So it's just like a big like SR flip, right? This was support once. This whole thing broke south. It broke back up. And now it's coming back just to test. Let's get that support, and then let's continue on this rally, right? So again, just, you know, it's just one way to look at stuff. I don't even know how did we start talking about that? Joe's fault? Definitely Joe's fault, right? For sure. Good job, Joe. Good job, Joe. All right. Anyway, back to business here. Let's pull up the weekly real quick, because we will be closing this down tomorrow. Big time weekly numbers are the 20 upstairs at 96.97, the 100 downstairs at 75.80, and the 50 in the basement at 70.91. All right, so those will be the big factors to look at come weekly. As far as the weekly is concerned, right, clear and obvious downtrend. Even the big push up never invalidated anything here, right? So you have your high, your lower, your low, your lower high, right? And then you skip all this junk for your lower low, your lower high, right? And then the next. So now this lower high, right, could be an issue depending on how you read the chart. But this lower high is certainly lower than this high, this previous high, this previous high, this previous high. Right? So you got a lower high, lower high, lower high, lower high, lower high, still working on it. Okay? So weekly is clearly in a downtrend. Now on the low side, you got a lower low, and you got this action over here that you basically avoid because it doesn't do much. So your obvious lows are a lower low, a lower low, a lower low. All right, so invalidation of this low is if the next candle comes in before reversing, right, isn't lower than this candle at 72.93. That's where you start getting invalidation, or you start getting swing fails. Swing fails north, swing fails south. Anyway, you look at it, swing fail to the downside. You know what I'm saying? And that's it. Now, it's funny, when you look at the weekly, you're like, how you don't play SR flips, I'll never know. Bang. Look at that. All right? Looks good. But a lot of it's hidden. A lot of it's hidden in daily candles. You know, it looks like you're so over past it. Like, that would have been the level to flip. 87.38 on the weekly. Right? And we have, what do we have? We got 88.02 as a level, structure level. That's this guy right here. All right? And that level's been flipped on the daily. Not on the weekly. Not yet. You got the break. You have not closed below it just yet. There's still time. All right? But it just clears things up a little bit. You know, the top side of this candle here, very good zone to flip, but really like the body right here, like that's your zone. So like 82.91, you come down, you touch that, you find support, and you push back up. Then you got a local flip. Right here. 1, 2, 3, 4, 5, 6, 7 candle, so 7 weeks, local flip. And that's like nothing, right? That's like intra stuff. But look at it. Look how good it looks. Now, if it fails and dumps through, well, then it fails and dumps through. All right, but locally, it looks good. Looks good. All right, let's see. How does that square with your thesis? Oh, yeah. I just talked about that. Long-term chart again. I gotta find it first. I don't think it's over here. No, I think it's on this template. Man, everything is super slow. I don't think it was just a website. Like, look how slow it's like not even loading. Give me a second here for this thing to actually load. Are we good? Let's see. It's probably on stamp, I would imagine. Yeah, this looks like it. Okay. So the larger swing fail, right, is up top over here. So this is your 19, that's your 14. That would be a swing fail up top here. So I have one box here as potential, right? Here's the inside one. And I currently have it marked off at a 4-6. So let's see, 4-6. So this is on a larger from 3. Is this 3? Yeah. So from 3 to 14, 14 down, that's that 6-1-2. So you could do, remember you could do a few things over here. On the other chart, we went to 6-1. So 6-1 is like floating around here. There's that 11-3-09, right? Potential up, bring it all the way up to, see now on the other chart, we were like 7-8 when we were hitting this thing. Which means it would be like way the hell over here. 7-8. So that's what that box represents, the potential chance of price coming down there. All right, but I marked it down here for now because I can look at that pattern inside of the current price action, right? Because that's working. That's working for now. Now, if that doesn't hold and we get that push up, right, then I do that. And I'll be like, all right, well, that's my next target area. Remember I said it can also go to a 1-1-3? So normally I would put a box 1-1-3. Yeah, normally I would put a box like this one. I would add another one to the next potential. Right? Because 113, there we go. 113 is a potential chance of another pattern. So if it loses, like, if it loses the opportunity to paint a whatever shark, but it maintains the possibility to paint a Gartley, then that's fine, right? So I would just take one, get rid of the other, and then move it along so that it's like, all right, well, the threshold from which it goes from 6 potential patterns to 5 potential patterns to 4 potential patterns to 3 potential patterns, all of that you get with price action. But you have to get that price. Like everything else is just like a theory. You know what I mean? Until it actually happens. So like when we look at the chart over here and we say, these are the options we could see. Well, that's based off of what we have so far, right? Like what we're looking at so far. So when we look at this and we say, all right, well, 3K to 14 down to whatever, 73, we'll call that just about a 618. What does that open the door up to? Right? So you cross bat off the list, you add the cipher in, you add the crab in, you add the shark in, you add the Gartley in, right? And you take the butterfly off. So you went from 6 potential patterns to 4, which means this C has 4 different opportunities, right? It has a threshold at like a 50, as low as a 50, and as high as a 113. So as low as a 50 is here, right? Which, like, depending on how we got that, we already hit. So that's probably what I have on the other chart, is already hitting that, like that, right? And then the high side is a 113. So anywhere from 113. So anywhere from this level to this level are potentials, right? But you don't make, like, that's the thing. You're not making any trading decisions off this. You only make a trading decision on D. And by the time you figure out what your C is, that's when you start looking for D. So you have to look at potentials. Like, is price reversing? Well, for now, yeah. So if price is reversing for now, then if you played this pattern out, right, then you'd be looking at a crab, which means this goes down to a 1.6, like a 161, right? And now you built yourself a crab. So you got 161, and then from here you can start judging on where you would have your profits. Take profits. Be from A to D. First target 382, 85.87. Second target 618 at 10.604. All right, but I'm not ready for that yet. I'm not ready for that, because if price does this, if all this is just standard, like, let me grab, not that, let me grab, not that, holy mackerel, where the hell is it? This, whatever, let's just do Elliott. So if this becomes like some standard action junk like that, right? Well, then clearly I got to make sure I have a C target here. Oh no, what did I do? No, I didn't want to do any of that. I got it locked in. So then my C target comes over here. Oh, it's just too much crap on here. Like that. Whew. Okay? So I'm not ready yet. You know? I'm not, it's just a potential. This is just as much of a potential as a 113 is. For now, because we don't have an official C yet. We just don't have it. Price isn't there yet. When we do get it, we'll know more, and that's when we start looking for D. But for now, you just have some ideas. It could be here. It could be here. And it could be up here. All right? These are all possibilities. For now, on the one chart, I have it drawn like that, but I think in reality, it'll probably come up here in that ballpark. Does that help? Does that make sense? Ugh. Okay. Could we see a harmonic that actually worked in crypto? If you can recall one. Yeah, dude, the Gartley from the bottom. That was like one of my favorite trades ever. This guy was perfect. It was so good. Let me see. I got to find it again. Was it this? No, I don't think it was that. No, it wasn't that. Where was it? Oh, boy. Well, let's see. XA. Let's try the XA. What is that? It's 8.6. No, I probably would have done that. 8.1. 8.1 down. Price reversed. No, that's not it. Man, oh man, where is it? It's definitely down here because the 1.618 was way the hell up here. Ah, man, it was such a badass trade. But it was definitely, I'm trying to remember now. Was it a Gartley? Was it a cipher? It might have been a cipher. Because then I had to drop down. 1, 2, 3, 4. But it certainly would have been long. 2, 3. This was this? No, I don't think it was that. One, two. Now, because that'd be a cipher. Let me, hold on. Man, you got me all messed up now. Let's see. That's the 1, 2. But then you would have already had your C down there. So that means your C would have had to be here. 1, 3, 3, 0, and a 2, 7. That wouldn't have worked. And that'd be short anyway, so that's not good. And then if we took the long side, 2, 7, so that'd be a 1, 3 with an 8, 5. And a 5, 6. So it wasn't that. Fuck. Man, good question. I don't know, but it's down here somewhere. I don't know why I can't see it. XAB, that's the 6, 1. The 7. 1, 1. There, no, that's it. So 1, 4. You had a 1, 3. So Confluence 786 with a 1, 3. All right, well, in order to save time, that would be, it's ugly, but that would be a Gartley that played out on Bitcoin on the bottom. And that was like all of this. So we got, when we played that, we went all the way up to 1.618 on the targets because everything just looked so good. So 1.6 was 4.7. It's right at that break right there. So you took profits at 37.20. You took profits at 39.17. You played the C, so you took more profits at 40.58. You played the double top, so you took profits at 42.36. Then during this one candle, right, you got your 1, 2, your 1, 4, and your 1, 6 all in one shot. Although, I don't know, this doesn't look, this was down here. Well, whatever. It was in this ballpark for sure. It might have been down here. I think it was down here. And it for sure was not on the Bitstamp chart. That's a fact. it was similar to this. I mean, that's essentially what it was. Right, it was basically the beginning of the Gartley was what ended up being the bottom, and the D ended up being the your next like high or low that really spelled the reversal. So similar to like this zone down here, where it's like, all right, well, this could potentially be your local low, right? And then your C or your D, if you had one, right, could potentially be your next higher low. And that would reverse this whole thing. Or at least the idea would seem to reverse the whole thing. Right? Does that help? Sorry. I have a template with just harmonics on it, but it, well, yeah, I should say I had a template with just harmonics on it. Guess what it got renamed to? Chinga's videos. And then the background went white and all the charts got deleted. All right, anyway, since you brought up bad things. Mark, I missed the thesis, sadly. I believe I am the one that even asked for it. Well, we just went back and looked at it. We didn't like go into detail and stuff, but yeah, I don't remember what day that was. Even that day, I mean, we didn't like go over detail, but we just kind of walked you through like, you know, what you would see when you're like kind of when you're looking at or drawing up a thesis, like questions that you would ask yourself, why this would make sense, why that would make sense, how you could see potential moves. You know, this is how like people say like, Bitcoin to $1. Like you could chart it down to $1, you know, if you really want to. You could chart it just as easily up to 1 million. So it just becomes like how practical or probable is your thesis based off of like previous price action, historical action, you know, percent gains or lost in between like major cycle moves, like that type of thing. It's all just like questions you would ask yourself. Let's see, MMLL, that could be his bullish target. Maybe he has a bearish target for what? Bullish target, bearish target for what? You're talking for the 11.4? 11.4 is that's a specific target for a specific trade. That's like, you know, that can only be bullish. I have a south side target, and it's the bottom of the wedge, so it's 68. Where are we at here? We just closed that candle. 6,900 is the most probable low side target in the event of, you know, major violation and some severe violence. So we already broke this support level. Clearly, we've never been able to do anything with this resistance level up here, but get rejected by it. Let me make that a little lighter. Okay, so with those two things in mind, right, breaking that level here and pulling back up, we got a little bit of a retest, so that's good. So all patterns and everything aside, right, losing those structure levels, your next major low would bring you to the bottom of structure, 72.93. But beyond that, you have a pullback 618, an all-time high 236, and you got the bottom of this larger, even if you're not playing the pattern, right, you got the trend, right? 1, 2, 3, it's confirmed, valid trend, pull down, that'd be your next stop. You know what I mean? I mean, those are realistic targets of where price should go. In the event that the local action doesn't hold. Now, you know, there's 1,000 things that could invalidate that or keep that from happening, and that's why we look to smaller, more local action to see what kind of reaction we're getting on those levels. Inside of that is this local falling wedge. which I think we're on like 8-point or something like that. So like an 8-point wedge cruising into the apex. Like everything looks good. Everything's respected. South side respected, north side respected. There's no reason why that wouldn't play out like a falling wedge. But not every pattern plays out 100% of the time. Most patterns play out like 60% of the time. So that being said, you already have that against you. But breakout traders would be looking for a breakout or a breakdown. So a breakout of this level would be the first like candle to really push up. You'd look for a close up over this level. That'd be the first candle to do that within this whole run. South side breakdown, you'd be looking for a candle to actually break and close below your south side floor. No candle in this run has been able to do that. So that immediately tells you that price is constricted with a viable ceiling and a viable floor. And there's no reason to speculate otherwise until one of those levels are breached, right? And you could violate them all you want, right? Like price came down below that, but it closed on the level. It didn't close under the level. It closed on the level. So it's good. The floor is still the floor, right? The ceiling is still the ceiling, even with this. You got a breach candle, breach candle, breach candle, breach candle, breach candle. All those been breaches. But at 7 p.m. Eastern Standard Time, the bears or the bulls or whoever make sure that that price stays under trend. Same, and say the same thing for the floor, right? So until one of these breaks, right, there is no business over here at 79 and 76 and all that jazz down here and up, 98, 10.5, 11.4. Like there's no action here up yet. It doesn't need to be. The action's right here and has been. Another 24 hours of trading and we remained inside of this tiny threshold. Right? Think about that. Think about that. Think about how wild Bitcoin is. Think about these candles here. Any one of them would have breached the entire tradable range that we're giving ourselves inside of this pattern. Right? Any one of these would have breached both sides. But they're respected. 24 hours of trading, and you didn't even get close to the top side. All right? So, of course, I got to take the magnet off here. That range yesterday was essentially $227 range. We got $1,200 candles. $227. And we respected it. And now today, the range is even smaller. Right? So now the range is $178. Are we going to maintain? Are we going to go another 23 hours and 20 minutes and 7 seconds and not close above or below that range? It's certainly possible. We've been respecting this pattern since we started developing it. And that's from the high at 10,350 to the low point throat or mouth open at whatever that low was, 90.92. Right? And we've respected it. I don't like this white noise. I'm the first one to tell you that. I'm not a fan of that. Don't like it. But the pattern really does respect itself down here. When we looked at it, I think in the morning update, I put the 12-hour up, right? And you just look at it. Man, it's just perfect. Support, resistance, support, resistance, support, resistance, support. Looking for resistance. right? It just works. So, until it doesn't, then that's what we got. Now, you do have other things in confluence for bulls and bears. 9 out of 10 of them are all bearish. You're under your 200 EMA, you're under your 200 daily, you're under your 50 daily, right? Those three right there are like, ugh. Those are all bearish, right? You can't flip your horizontal support resistance flip zone. The all-time high 382, 94.41 held. So that's a push. That's bearish. You just lost this level over here, which is this guy over here. High side, previous structure, right? And also weekly action. You just lost that level. Gone. You lost your 8802 weekly structure zone. Gone. Right? There's no real reason to be long except for the few specific ones I put in the update. Breakout traders look at this 2-candle move and they buy to 618. And 618 was right here. They literally just bought it right here. False break would mean these candles in my mind don't even exist. So I would take support down here. SR flip traders would have bought right here with a $10 cushion. The $10 cushion, they would have bought that. Long-term pattern traders would have taken the swing fail from 13,880 and they would have bought the retest front run $23 right here. Those are the three reasons you'd be long right now. Otherwise, literally everything in TA would tell you to go short, which is another reason to go long. Right? It's crypto. Crypto's crazy. All right. Anyway. Let's see. ENG BTC. No problem. What the hell? Look at this. ENG just doing stuff. 15. Damn. All right, so finally something happened. Looks like it stopped right on our resistance level. That's good. It used it as a launch pad as well, so that's good. Clearly broke through previous action right here. That was all the way down there. We'll get rid of that. Let's see. Maintain here. So that was a good break. Was it a good retest? Not really a great retest. That's unfortunate. Right? So, like, if you were going to buy this breakout and you didn't have this support resistance level to buy, you would have bought the breakout, right? You would have bought the retest. You never got it. Look at that. You never got it. It's like you would have had orders down here. Right? You never got it. And that's why, like, things get front run for one, and not all patterns play out equally. Right? So it's good to have, like, this buy zone, that support level. It's good to have that. Right? Because that's your indication that, hey, it may not be the best entry, but it's an entry. In this case, it was your best entry. Right? So that's a good entry right there. It's a good spot. Now, where are you going to go, though, right? That's the whole thing. When are you going to get out? So let's take a look. So top side resistance now. Oh, you got a focal point here. It's not super pretty, but it's something. So 1, 2, flip, resistance, whatever this junk is, and then break over here. So that's a good spot. Obviously, we already broke through it, so it's irrelevant, but that is a good location. So I'm happy to see that. And then let's take let's see, 1, 2, up. Let's take this move over here, and let's get some measurements. Let's see what kind of targets we come up with. So always a 1.6. We're trading right there right now. So that's your first level take profit. Next level take profit would be 59.23. And that's basically the top side of this candle here. So that's good. I would take those two. This level's pretty good as well. Gotta be honest, like a lot of these levels look really good. There's a lot of respect on this chart. So like this right here, flip, support, push up, painted a higher low. So you got yourself into a trend here and then you broke it. When you broke it, you hesitated on that same level, right? You pushed down below it, you pushed back up, became resistance. Pushed back down, found support, pushed back up, became support. Dropped back down, flipped it, became resistance. Came back down, double bottom, found support, push up, right? Couldn't quite reach the high, pull back, mid-turn, and then come back up for major resistance before painting a lower low. So this level's really good, right? Now this, whatever this whole, whatever happened over here, it's I don't know. I mean, it looks like pump and dump, more likely a pump and dump, but it's really throwing off like all the local TA, which is just like super annoying. But I like the level regardless of this wick right here, just from this action. So that's an area to look at, right? That's an area to look for rejection. It's an area to look to take profits. Right, so you'd be looking at like 50.87, 51.86, you know, front run a little bit. Again, like this, the 1.6, like that's exactly where you take profits. People are already doing it right now. So that's a little early in this candle. But if that's the overall target, right, then, you know, this whole thing's a wrap and it'll probably come like way the hell back down. But if it's gonna, you know, if it's gonna do some stuff, it's got 23 hours and 11 minutes left on the daily, but it could just sell everything off like this candle did. You know what I mean? Sell it all off, and then you lose, you know, just about 100% from where you started the trend in the first place, which again is just like super annoying. Let's see, next level. This is where it gets a little choppy. This is like garbage over here. 2.6 is okay. Support, flip to resistance. A lot of junk though over here. This support level's good. I like this level a lot. So this was support, and then all this move up here, and then right back to support again, and got that big bounce. You know, so that and it's perfect, perfect level. It's exactly the 3.618. Yeah, that's good. That's what I'd be looking at. All right. ENG. Very nice. Nasser, thanks. I'm not sure for what, but you're welcome. Those are reasonable big boy targets. I mean, they're targets. Triangle patterns are typically likely to break out when the formation is about 70% full. Well, yeah, yes and no. Between 50 and 75% is when a legitimate symmetrical descending or ascending triangle should break out. That's a wedge. That's not a triangle. Here we go. However, wedges have a lower hit rate, especially if it's counter trend. Yeah. Yes and no. So it depends on the wedge, right? Like specifically speaking about a falling wedge, they're more likely to break out. Where a rising wedge is more likely to break down. And now you got to put those inside of their precursor trend, right? So what was the preceding trend like before a rising wedge or before a falling wedge? So in the case of like Bitcoin on that one, right, it is the preceding trend, right? Because the preceding trend was range, technically. overall, you're inside of a larger downtrend, right? But where you started the pattern out was on the breakout of range. So you're creating that. There is, like, technically is no preceding trend because it's so local, right? So if you were going to do any preceding trend, right, then by definition, the preceding trend would have actually been up, which wouldn't make any sense, right? There's not enough candles to actually paint it. You'd have to paint it on like a 4-hour chart just so you could see like an up, a pullback, an up, a pullback, an up, a pullback, just to make this a preceding trend, just to fulfill the technicalities of it. Right, but this, for all intents and purposes, is a falling wedge likely to break north to the upside. Yeah, so I mean that's how that would look. On the higher time frame, we are on a downtrend. However, there could be a bounce around this area we're at. So I'm wondering if it plays out. Thanks for your input. Yeah, no problem. No problemo. Yeah, I mean, like I said, for now, like, there's a large group of traders that are not trading. Totally understandable, right? We came out of like a rangy, choppy, super crappy area just to get back into another rangy, choppy kind of downward trend area. And every day it's like another new major level, another new major MA, another new major EMA. It's one thing after another, which gives you another confirmation candle, and then you wait for another confirmation candle to confirm the other confirmation candle and say, okay, well then I guess we'll go short, or I guess we'll go long. So it's just a bad spot, you know? And like today, with literally no volume and, you know, 0.25% movements, there's not a whole lot to look for. So that way you just trade some alts, right? Trade some alts and let Bitcoin do what Bitcoin's going to do. And whatever it does, then you set your alerts, right? So for me, it's very clear. It's very, very, very simple. We break the north side, and you got my attention. We break the south side, and you got my attention. If we're inside here, I just don't, it doesn't faze me. Nothing's happening, basically. Nothing's happening. Nothing's happening that's alarming. There's no trading that can take place within these boundaries that gets me to make any trading decision at all. Period. Zero. Nothing. Not one thing. I mean, unless I was scalping, but I don't think I'll be scalping tomorrow. Yeah, so basically low side 8,400, high side, call it like, I don't know, 85, 88, whatever, within that range. Yeah, I mean, you could literally set alerts on TradingView, and you can just like bang right here and be like, yeah, add alert, and, you know, wake me up when we do something. And then, you know, you got to trigger that to like a script that'll like play that GIF with the paper stick man poking the Bitcoin with a stick. It says like, come on, do something. You guys with me on that? No? Okay. Well, that's fine. Not a big deal. Anyway, yeah, so not a whole lot to look at here. We'll see what happens. We're getting into Sunday trading. So Sunday trading, you know, Sundays have been dumpy. But when Saturdays were pumpy, right? So this Saturday gave us nothing. So, you know, there's no telling what Sunday's going to give us. I certainly don't expect a lot of volume, especially with today being very low volume. If we do get a lot of volume, I would sort of imagine it would come towards the end of the day near CME Open. So you got your Forex will open back up, CME futures will open back up, and then you start getting the Forex traders back into the mix, right? Because they've had the last 2 days off, and then you get the futures guys back in the mix because they had 2 days off. And then you get everybody else that's still waiting for, you know, something to happen. Now, you know, it could be an hour from now and we drop $500, right? Or we could pump up, $800. It's just how Bitcoin is, man. Sometimes, the Asian market takes over and they see something or want to push something for whatever reason, and the books are thin on the weekends and we go flying. So don't sleep on this. Just because it's not doing anything now, it doesn't mean it's not going to do something in the next, a couple of minutes. All right, let's see. There's another level I'm looking at, downward, trying to draw it. High October 21. Is this daily chart? I would assume so. High October 21. High October 21. This. And high. You got me going backwards. You really got me going backwards? October 10th. Why on earth would you go backwards? October 10th. October 10th. But obviously I would need to flip that because why the hell would I have the dates backwards? It has a lot of confluence from way back months ago. Oh, yeah? Yeah? Oh, I don't know about that there, buddy. High October 21 and high October 10th. Well, another chart? I mean, how much different is the other chart? That like a couple months ago puts me at like $443,000. Are those the right dates? Did you give me the right dates? Double check your dates. And next time, give me the historical one first. Why would you tell me this one first? That's so confusing. Well, in other words, is it the same price action though? Like, are you looking at this price action and you're seeing something? I would do something over here for sure. I don't know. This doesn't have any or significance to anything, I don't think. Not like this candle specifically. I don't know what you're seeing though. If you try it on Coinbase, you'll see what I'm talking about. Let's everybody entertain Nasser. Nasser needs some entertaining right now. He must be very bored. Okay, so let me get my super extendo over here since I know what kind of nonsense I'm getting into. And what did you say? October 10th? Yes, October 10th to what? October 21st. It's right here. Okay. Now let's see what Nasser's got. Nasser. Coinbase. I'm here, buddy. I'm here, and you're killing me. Nothing's happening. What are you looking at? I don't know what you're looking at. Figure it out and let me know tomorrow. Because it's definitely not those two dates. I'm showing you the dates. I'm on the right chart. This is October 10th. This is October 21st. You see the line. Yeah. When you've put the whiskey down, give me a shout. All right. Anyway, for everybody else, that's a wrap. Gone way over our scheduled time here. Okay. Very good. I'll see you guys later. See you guys on the Discord, floating around here and there. Enjoy the rest of the weekend. If Bitcoin is just sideways, just keep your eye on those two very local levels. If they do break, then just be on the lookout for what may or, may not be coming. Okay? But until then, there are plenty of trades on the board, so we'll take one trade at a time, one level at a time. I want to see you guys on the exchanges. Until then, happy trading.